Senator Elizabeth Warren has sharply criticized President Donald Trump's proposal to reduce the frequency of corporate earnings reports from quarterly to biannual. Speaking to Yahoo Finance, the Massachusetts Democrat said the change would weaken oversight of public companies and deprive investors of critical financial information, News.com has learned. Recently, President Trump argued that earnings reports should be filed only every 6 months. He claimed the move would reduce compliance costs for businesses and encourage executives to prioritize long-term growth rather than short-term results. The Securities and Exchange Commission, SEC, currently requires publicly traded firms to disclose earnings every 3 months, a practice in place since 1970. Trump's push came as the SEC indicated it would review his proposal. While any change would require formal approval, the agency has signaled it may prioritize the idea. Warren dismissed Trump's reasoning, suggesting that the president's motivation is political rather than economic. It undermines transparency, she told Yahoo Finance. That is the whole point here. She argued that Trump doesn't want real numbers reported in any of the economic areas, because he knows he's in trouble on the economy. Referring to Trump's firing of the Bureau of Labor Statistics Commissioner after a weak jobs report, Warren added, "This is the standard Donald Trump trick, and that is, if you don't like the numbers, then try to get them out of sight." And that's what he's trying to do. In response, White House spokesperson Taylor Rogers sidestepped Warren's criticism of the policy and instead targeted her past claims of Native American heritage. "The last person who should be giving advice on SEC requirements is Pocahontas," Rogers said in a statement to Business Insider. She couldn't even tell the truth about her own background. Quarterly reporting has long been a cornerstone of U.S. financial markets, offering investors regular updates on corporate performance. The European Union abandoned the practice in 2015 in favor of biannual reporting, citing reduced regulatory burdens. However, experts remain divided in the United States. Some see potential cost savings and reduced short-term pressure on executives, while others warn that investors would face longer gaps between disclosures. Warren stressed that less frequent reports would leave shareholders in the dark. "Investors do not need to see less information about the companies that they are investing in," she said. "After all, those companies are using investors' money."